If you're staring at Bitmine Immersion Technologies, ticker Bmnr, around $30.87 and wondering whether the stock still has room to run after an absurdly strong rally, you're not alone. In the past year, Bmnr delivered an eye-watering 414.7% return, yet today it trades a fraction of its 52-week high of $161, roughly 80% below the top. That creates a peculiar psychological tug, euphoria and skepticism at once. Why Bmnr exploded higher? The simple story. Bmnr's upside came from a straightforward cocktail: massive ETH accumulation. Owning millions of ETH is like holding a commodity that doubled or tripled in short order when the market rotates. As ETH rose into the $4,000 plus zones in prior rallies, Bmnr's treasury value ballooned, which investors priced into the stock. Staking narrative. Because ETH can be staked, Bmnr doesn't just hold a static treasury, it can earn yield, converting price exposure into ongoing cash flows. That makes a treasury holding firm look less like a collector and more like an income generator. Speculative cryptomania. When bulls run, leverage, ETF flows, and retail FOMO chase the names most exposed to the rising asset. Bmnr benefited from that speculative momentum. Capital raises and accrual strategies. The company raised capital, sometimes aggressively. That built the war chest for accumulation and signaled intent, but also raised dilution anxieties, which we'll revisit. So the rocket fuel was ETH appreciation plus staking narrative plus capital deployment. But rockets have oxygen limits. Ethereum's later sell-off and dilution fear are the brakes. Why it fell, the twin anchors, ETH sell-off plus dilution fear. Two straightforward reasons explain the retracement from $161 to $31. Ethereum severe sell-off. ETH falling from above $4,800 to roughly $3,100 means the value of Bmnr's ETH treasury dropped significantly. If your company's balance sheet is primarily crypto, macro crypto price swings are your headline risk. Dilution and capital raises. Bmnr raised capital aggressively to buy more ETH. That's a double-edged sword. It funds accumulation but can dilute existing shareholders. Frequent raises, especially if viewed as raising to buy at higher prices, make investors nervous and can pressure the share price. Add to that the normal market rhythms, profit-taking after a parabolic move, rotation into other sectors, and a sharper risk-off if crypto investors de-risk, and the drop starts to make sense. Imagine a pirate with a ship full of gold bars. If the island prices gold and seashell value halves overnight, that pirate's share value collapses, even though the bars remain the same. And if the pirate keeps asking for more sailors' pay, capital raises, the crew grumbles. By the way, if you are getting value from this video so far and want more like this, please like the video, it means much to us, and hit the subscribe button, and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. The big lever, Ethereum's rebound. This is the single most important point. Bmnr's trajectory is correlated to Ethereum price. If ETH recovers from $3,100 back to the $5,000 to $7,000 zone, Bmnr's enormous ETH stash becomes dramatically more valuable. Quick math, illustrative at $3,125 per ETH, approximate current in your data. 4.16 M ETH is almost equal to $13.0 billion. At $5,000 per ETH, 4.16 M ETH is almost equal to $20.8 billion, is almost equal to plus 60% treasury value. At $7,000 per ETH, 4.16 M ETH is almost equal to $29.12 billion, is almost equal to plus 124% from $13 billion. Those moves directly improve Bmnr's balance sheet and the narrative investors can build around it. Because Bmnr also collects staking rewards, the company gains another compounding effect versus pure spot holders. If Bmnr is a vineyard, ETH price is the price per bottle. More expensive bottles equals bigger seller value. Plus, the vineyard sells a portion of the vintage each year, staking rewards, so there's ongoing revenue. Maven and staking, from treasury to revenue stream. One of Bmnr's crucial differentiators relative to many crypto treasuries is staking and the plan to build Maven, Made in America Validator Network, specialized infrastructure to validate Ethereum and generate staking fees. Why this matters? Staking generates real cash flow. Unlike Bitcoin treasuries that earn nothing while you wait, staking rewards, and certain transaction fee capture mechanisms create recurring income streams. This can stabilize valuations because investors can value the company like an asset generator, not a pure price lever. Regulatory positioning. Building a US-based validator network with compliance in mind can attract institutional partners who are wary of offshore custody or regulatory risk. That institutional appetite could drive partnerships, revenue, and credibility. Margin enhancement. If Bmnr can deploy specialized hardware and software and capture validator fees at scale, return on assets could improve beyond simply holding ETH. Instead of owning an apartment building and letting it sit empty, Bmnr both owns the building, ETH, and rents apartments, staking rewards. The rent reduces the carrying cost and can finance further expansion. Caveats. Staking comes with operational risk, slashing, downtime, regulatory ambiguity, and technological complexity. Building Maven successfully is a real execution challenge. The balance sheet advantage, light debt, healthy cash. Compared to some public Bitcoin treasury plays, looking at you, MicroStrategy with large debt loads, Bmnr's $102 million liabilities and $512 million cash, per your figures, look conservative. Why that's meaningful? Lower liquidation risk. A firm with heavy leverage might be forced to sell assets, ETH, during bear markets to meet margin calls. Bmnr's lighter debt reduces that forced sell risk. Operational runway. $512 million in cash affords time to build software, deploy validators, and pursue strategic initiatives without immediate sell pressure. Strategic optionality. Management can use cash to buy more ETH during dips, invest in infrastructure, Maven, or fund acquisitions. It's the difference between a homeowner with no mortgage and one with a huge mortgage. When the roof leaks, the mortgage holder is more likely to sell assets to cover costs. The alchemy of 5%. Ambitious but costly. Management's stated aim to accumulate 5% of total ETH supply is audacious. Achieving it would make Bmnr one of the single largest holders globally and position the firm as an influential liquidity player. But consider scale and cost. To go from 3.45% to 5% of supply requires buying millions more ETH at multi-billion-dollar prices. Funding that expansion could mean additional capital raises, dilution, or debt leverage. Market impact. Large purchases can move ETH prices and increase execution costs. Accumulating at scale without pushing the market against yourself is difficult. Regulatory and governance optics. Owning a huge share of supply brings scrutiny, from crypto communities wary of centralization to regulators concerned about market influence. So the 5% goal is headline-grabbing but operationally heavy. If achieved, it's immensely powerful. If pursued recklessly, it could pressure the stock through dilution. Note this as well. Daniel 7 verses 25-27 tells us, "And he shall speak great words against the Most High, and shall wear out the saints of the Most High, and think to change times and laws. And they shall be given into his hand until a time and times and the dividing of time. But the judgment shall sit, and they shall take away his dominion, to consume and to destroy it unto the end. And the kingdom and dominion, and the greatness of the kingdom under the whole heaven, shall be given to the people of the saints of the Most High, whose kingdom is an everlasting kingdom, and all dominions shall serve and obey him." Want more information about the books of prophecy? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: "I stayed until the end." Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe, and then turn on the notifications bell. If you do this, you greatly encourage us to continue bringing to you more insightful videos. Do not miss out on our future videos. All I am asking is your subscription. Thank you for joining me today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel, and share your thoughts about today's video. Wish you God's love.